an hour away from the opens in Shenzhen and Shanghai. Hong Kong markets are shut for a holiday. You're watching the China Show. I'm Yvonne Man with David Ingles.
Happy Friday. Our top stories today. China facing high expectations ahead of Saturday's finance ministry briefing. Investors are hoping for more than $280 billion in fresh fiscal stimulus and measures to also boost consumption. Now, Asian stocks are edging higher even as hotter than expected inflation in the U.S. fuels debate about the Fed's next move. The Bank of Korea beginning its easing cycle with a 25 basis point cut. And we're also looking ahead to Tesla, set to reveal its long-awaited driverless robotaxi prototype in the next hour, with Elon Musk's reputation firmly at stake.
All right, happy Friday. And yeah, it's not going to be much of a weekend, really, for most of us that are watching, of course, China with that MOF briefing that's said to be taking place in about 24 hours or so from now. So certainly that's going to be the key thing to watch. All eyes are going to be on that MOF briefing here on just the future of fiscal policy for China. But in the meantime, we're still trying to digest that U.S. CPI print that we got overnight, which came a little bit hotter than expected. So for some, you're seeing U.S. futures are flat, but we did see a little bit of wobble in terms of U.S. equities. Seems like Asia is shrugging that off, at least on this Friday morning here. You're seeing some decent gains coming through from Japan. Korea just coming out with their first rate cut of this easing cycle. So certainly one to watch here at the top of the next hour when we hear more from the governor on what was behind that cut. And Taipei coming back from that holiday, we're seeing gains about 0.7%. The dollar, though, certainly is the key thing to watch, just given that we actually have seen in the last few weeks or so a 2% gain or so since the September lows. 2s and 10s basically have gone up about 40 basis points. And you got to wonder, are we at risk of seeing some sort of November cut now from the Fed, right? We take a look at what swaps are pricing in. I think it's about an 80% chance the Fed's going to cut by 25 basis points in November. So about 40 basis points by year end. That definitely has shifted the narrative of, what the Fed's going to do. You'll have the likes of Bostic even saying he's comfortable skipping one of these meetings when it comes to rate cuts and so. So take a look at that. Of course, we're approaching the open in China. Hong Kong markets are shut. And so we're watching very closely, of course, if there's anything, right? Obviously, volatility is the name of the game here right now. We saw massive swings yesterday. Looks like A50 futures are punching higher by about 1%, but it could be a pretty bumpy sort of session here today. You're still seeing some green when it comes to CGBs this morning and some of these proxies like the Aussie dollar flat. But yes, commodities are doing decently well too, Dave.
Yeah, and you got to wonder whether we are overestimating the short term, almost like technology, but underestimating really longer term what this means, right? So valuations have snapped back, but we're still below where you would be if we were in a bull market, yes, right, of multiple expansion as well. Some of the commentary coming through, which we'll get to later on, is that, we could be talking, we're still at the very cusp of a longer term bull market moving forward. As far as today is concerned, so as Yvonne is pointing out, no Hong Kong trade, mainland, of course, 4,000. Do we close above that on the CSI 300? The CGB market, so we were down on yields a third day yesterday. We're down a further in the opening minutes. The price action in the CGB market doesn't seem to suggest that markets are looking at some sort of reflationary measure coming through. But, of course, that could all change as well. Anyway, well, more on that in a moment. We do have a 30-year bond auction today. I don't think we have a 50-year bond auction today. 30-year bond auction today at the very least. And we're looking at this ahead of that crucial briefing, of course, this time tomorrow, roughly.
Yes. So, I was talking to some guests yesterday, and they were saying, look, this is... Our weekends are ruined, basically, because they have to watch this.
Well, they're always ruined anyway.
And why Saturday, right? We were asking in the timing about all this as well, right? And we saw that PBOC meeting was right before markets open, and that certainly sent a lot of good news. The fact that they're putting it on a weekend, and it is a working day in China, mind you.
Yes.
But markets will be shut. So does it give us a few days to maybe react, settle, maybe be a bit more rational in terms of the reaction?
Sleep on it, right?
Sleep on it a little bit for a day or two. So yeah, that's exactly what we're looking ahead to, right? So hoping, so that 2 trillion renminbi number is certainly what we're watching, which is about $283 billion in fresh fiscal stimulus from Beijing. That's the consensus, it seems, right now to appease investors. And that is also the view from our new Bloomberg survey ahead of that briefing tomorrow from the finance minister. For more, let's bring in our China correspondent, Vivian. What else are analysts looking at besides this number?
Yeah, so we polled 23 market participants, majority are expecting that 2 trillion yuan, but there are 4 who believe it's going to be above 3 trillion yuan. Bloomberg Economics, by the way, thinks that there's going to be no fresh stimulus at all. So pretty divergent opinions here. But of course, more important than that number is the content of that stimulus package, right? How much of it is going to be dedicated to stimulating consumption versus going back to that old playbook of, infrastructure investment and supply side intervention. So investors are really looking out for these measures when it comes to consumption, whether there would be consumption vouchers, whether there would be subsidies for certain sectors of the population like the elderly and the poor, greater social safety net, support for families with children, and an expansion of that equipment upgrading program as well at a bigger scale. And also when it comes to property, whether the government will relax the curbs on the usage of this special local government bonds to use those funds to buy up unsold homes. And this is coming as fiscal spending has been slowing down. It shrunk 3% in the first 8 months of this year. And Bloomberg Economics thinks that the MOF briefing will actually just say that they're going to disburse all the unused funds so far, which is about 18 trillion yuan that is still not yet spent.
Yeah, okay. So, there are a lot of levels to that too. And at the end of the day, this has to show up in the economic numbers, right? And I think the wage inflation, which came through recently, suggests that there's a tough challenge ahead as far as getting that economy turned around. I think on the weekend we also have inflation numbers coming through, which will probably tell us about the same thing.
Yeah, so wages, at least hiring wages, that has dropped in the third quarter by 0.6%. And if you look at full year to date, just quarter by quarter, it's been decreasing. According to the online recruitment platform, Zhaopin, we can pull up that chart for the quarterly numbers. This is the inflation data. So September data, consumer price index expected to be at 0.6%. Now, this would mean that it's the 19th straight month of inflation falling below 1%. And when it comes to producers' price index as well, that's expected to extend declines further for the second straight month. It's already in negative territory for close to 2 years now. That's partly because of falling commodity prices as well before China announced those big stimulus. And so you have both wages and prices falling. So it's just this deflationary spiral, right, that comes against the backdrop of the other unemployment numbers, taking up 5.2% overall, youth unemployment at a record high in August, above 18%. So overall, very, very weak numbers. And so this the fiscal stimulus is really, really urgent right now.
All right, Min. Thank you, Min Lo, there, our China correspondent, on what to expect this weekend. Obviously, it's going to be busy. You can turn to your Bloomberg for more on the briefing tomorrow in Beijing. That's going to be opening up at T Live Go on your terminal to get commentary analysis from our expert editors.
Yeah, and from one inflation print where I think the conversation was we need a little bit more to maybe one where the markets were hoping to find something a little bit less. Inflation in the U.S. coming in for September above expectations, hotter than expected, especially when you look at core month-on-month, which came in at 0.3%. And right after this, again, and as you would expect, conversations around is the Fed still going to be able to cut interest rates on November 7th? So let's call it over the next 2 meetings or so. So for November 7, there's currently, based on swaps, less than 80% probability that the Fed will be able to cut interest rates. Based on the commentary that Yvonne is pointing out so far, it does seem to suggest that they're still comfortable with the longer-term trends, although if the data does suggest or merit it that they're fine, at least I think Mr. Bostic was happy to skip at certain meetings if that is, of course, what the data is telling them to do.
Yeah, we're not even talking about cuts anymore. We're talking about pauses in the next few meetings or so. Certainly the narrative has shifted. Let's bring in Garfield Reynolds, who leads our Markets Live coverage in Asia. And Garfield, it seems like, bond markets, they're starting to really price in this no landing scenario. Do you think that's fair at this point?
Yeah, I think that's pretty fair. When you look at a range of data, admittedly the jobs claims overnight were a bit concerning, sort of thing that's going to keep the Fed focused on actually cutting in November rather than pausing. But the inflation numbers have really put the kibosh on any thought that when the Fed cut by 50 basis points last month, A lot of people were saying that they expected the Fed to cut at least once more by that amount this year. So, maybe 50 in December after 25 in November, or the other way around. The inflation data is the latest thing to kill that off, along with we had the very strong jobs data report. So the data just isn't there for a rapid pace of rate cuts. And even after we had a number of Fed officials overnight, saying they were likely to look through 1 month of slightly hot CPI that we got overnight. We also have, the Fed, the Atlanta Fed's GDP now forecast is at like 3.2% for the current quarter. That's way above the sort of pace that would signal the U.S. economy is, really needing a lot of assistance. Now, rates are restrictive now. Powell and co. have made it clear that they want to make them less restrictive because they think the labour market is already cooling sufficiently that they're concerned about what the long-term impacts might be. So they're still definitely in an easing cycle, but the tail risk of a sustained revival in inflation, that's come back into people's minds, even if it's still a fair way out towards the left tail area. Meanwhile, the idea that we're heading for a recession, which was definitely part of what some in the bond market were considering when you looked at the pace of cuts that was being priced in, when you looked at what was going on with where yields were, that's well and truly off the table. So the risks, especially heading into an election that's likely to emphasize lots of spending in the coming years, a lack of political will to rein in large deficits, all of that says that the bond market is probably still looking a little bit too sanguine about the risks for inflation going forward, and certainly a bit too much focused on the idea the Fed is going to be cutting rates rapidly.
Garfield, thank you so much. Garfield Reynolds, out of our MLive team, of course, over in Sydney for us, is really just keeping it real on where we are as far as pricing goes here, amidst this constant dance between 25, 50, or maybe not at all, at least for specific meetings. Right, just ahead, we're looking ahead to the Open in China, and we talked with William Blair's Vivian Thurston. They've been adding exposure to Chinese equities. How are they positioned going into this massive weekend, where this time tomorrow with the finance ministry coming out with, hopefully, based on market expectations, at least 2 trillion renminbi in fresh fiscal stimulus. Counting down to the open of trade in Shanghai and in Shenzhen. Markets in Hong Kong are shut. This Friday, futures are up 112 points. This is the China Show.
Season is here.
I think that this earnings season is going to be so important.
Bloomberg is first to break the numbers.
NVIDIA earnings now crossing the wire.
Bank of America, the retailer Five Below.
There is something for everybody.
With the smartest insights.
Weaker inflation is not great for earnings.
I think the consumer's a bit more resilient.
You've had earnings recessions flow through growth and then cyclicals and defensives.
Earnings cycle continues on Wall Street.
Continuing coverage on Bloomberg. Context changes everything.
Futures are paring back some of the gains, but we're still seeing some decent sort of upside here. Potentially could be a good Friday as we wrap up the week. But as we talked about, we're if we still talk about a pretty volatile session, we're not really going to see any sort of direction, maybe, given that we're waiting for clues of what happens on Saturday during this MOF briefing as well. So, but what we're watching out for is the CGB yields. So dropping for a fourth straight day. We're seeing that 10-year at 2.13 right now, Dave.
Yeah, I mean, it's anyone's guess, really. I mean, we do have a consensus out there, 2 trillion, but is that what we get? If we don't get that, what happens next, right?
Yeah.
Let's get a sense, though, where the market's going and how markets are positioned going into the big weekend. Vivian Thurston, partner and PM at William Blair, joins us to talk us through this. Vivian, good morning from Hong Kong, and thank you for joining us. So specifically, as far as you guys are concerned, what is your China exposure right now relative to, I guess, the last time we spoke a few months back, and relative to what the benchmark is?
Yeah, for our emerging markets strategies, the broad-based emerging market strategies, we have reduced our underweight in China and but we still reserve some dry powder and to see how the policy evolves, and try to focus on more bottom-up opportunities and stop picking alpha generation from bottom-up perspective to continue to generate performance for this asset class.
Okay. What are you looking for in this press briefing from the Ministry of Finance tomorrow? Is it more about the size? Is it really about 2 trillion renminbi? Is that going to be enough to appease this market? Or are you looking more on what the focus of this stimulus is going to be?
Yeah, I think both. The magnitude of the stimulus does matter. It's because I think the market expectation has run high. And I think whether it's 2 trillion or even above 2 trillion, definitely there's some expectation there. But more importantly, I think we are looking for how they are going to implement those fiscal stimulus. And I think that has been a key, given that there's a lot of unused fiscal policy came out before. And I think that become a key, because fiscal stimulus is very different than monetary stimulus to some extent. Monetary stimulus, you can quickly see some liquidity goes into the system. But fiscal stimulus, you need the real project to come through, the real actions to take place, and then to eventually trickle down to employment, income, and then also consumer confidence.
Vivian, I guess just to not really so much temper expectations, but manage really how markets should be looking at tomorrow or maybe even future briefings out of officials. What do you think the current scale of stimulus and measures that they put out, what is it not designed to achieve, in other words? Like where are expectations too high at the moment?
Yeah, I think it's a guessing game right now. It's very difficult to really project or estimate the magnitude. I think the key depends on what the government try to accomplish. If Chinese government just try to get to the GDP growth target, and I think they may not need to come up with 2 trillion stimulus, because there's other ways, whether exports or whether some short-term kind of levers they can pull. But if they really want to solve the problem for this prolonged cyclical downturn, which I probably mentioned before, is a confidence-led downturn, they need to address the property market decline, the consumer confidence, the anemic domestic consumption, and employment issues. So that, I think, it's definitely more important, and that tend to lead to more sustainable fundamental outcome. And I think that definitely support a better investment case for Chinese equities.
In terms of what has outperformed so far, since we've heard this coordinated response from the PBOC, policymakers, regulators alike, it's been the tech space. So I think tech chip makers, for example, have obviously people betting that fiscal stimulus is going to help that sector the most. Consumption, whether it's discretionary, staples, the like, property even. I'm just wondering, what parts of this market do you think is still has room to chase, and you still can run a bit farther, I should say? And what looks overvalued to you? Where do I take profits?
Yeah, this is a typical recovery phase, meaning that everything rallied, and then the low-quality companies tend to rally even more because those other ones get sold off probably more in the past. So during this phase, it's very difficult, I would say, for quality growth investors like us to really identify a strong bottom-up ideas. But if we look past this phase, I do think we continue to like the companies with stronger corporate fundamentals, whether internet companies, whether travel companies, some tech companies, and even appliance or some domestic-focused industrials companies. Those companies, I think, eventually will be the leading companies in terms of the earnings improvement. And they not only will benefit from whatever the government come out in terms of the stimulus, they also will continue to gain market shares within their respective industries. So that's what we've been focused on. But at this phase, it's very difficult, especially when the market rallies so hard, so much with such a short time period. It's very irrational to some extent.
Yeah, I mean, Vivian, imagine if you took a 3-week holiday and you came back and suddenly the world is what it is. You mentioned your EM strategy. I mean, the other part to the question is, how have what changes are you prepared to make to your EM strategy if, in case, of course, you need to increase your exposure to China even further. How are you prepared to fund that? What takes a back seat?
Yes. So absolutely, for global emerging markets investors like us, in order to fund China, we have to take it down from other countries. Of course, we tend to take a profit from some outperformed countries, and India is definitely one of them. We continue to like India fundamental stories, but valuation has extended, and plus our position in India has been pretty high. And other names, probably in the Taiwan tech space, especially mid-small cap space, also have run very strong, very hard yet today. But the leaders we continue to like very for the longer term. And then just kind of maybe a little bit from Latin America, for example. So you're right, it's not a simple, straightforward kind of in portfolio construction move. But definitely we need to be cognizant about managing the risk related to China.
Vivian, hope you have a great weekend. Vivian Lin Thurston there, partner and portfolio manager at William Blair, joining us out of Chicago here this evening. Of course, as Hong Kong markets are shut, we're counting down to the open in Shenzhen as well as in Shanghai here today. Looks like things, we're petering out in terms of the momentum that we saw in futures already here. But there you go, 213 for your Chinese 10-year yield, 708 for the currency this morning. We got plenty more ahead. This is Bloomberg.
Okay, going into the final session of the week on the Chinese mainland, just again, a public service reminder that things are shut here in Hong Kong, so we are already, at least most of you, are into the weekend already. 0.2%. What we're tracking is this continued rally and reversal lower in yields. As you can see on your screens, we're now down a fourth day, which I guess positioning aside doesn't really tell you a lot about expectations over tomorrow.
No, really. I mean, it's anyone's guess at this point. And how many more agencies can come through with press briefings after the MOF? What would still matter?
Well, that's almost like coming out in a singing contest after Whitney Houston, right? Like,
I think the premiere has to show up, maybe. Or I don't know, someone. Anyways, in terms of analyst actions and to sports, cut to a hold at Jefferies there. They were talking about this worse than expected third quarter retail sales data. They said the structural problems are intensifying there. Jamal Joe also cut to reduce at HSBC. China-ASEAN, this is the dairy maker as well, also cut to reduce at the bank as well. So a bit of a consumption flare for you this morning.
Yeah. Okay. Going into the open today, so we're trading at 4,000 on a CSI 300. Some of the commentary out there, and we have a great story on this on the terminal. Out of Renaissance Macros, Jeff DeGraff, he sees 6,000 on this index. Oof. Do we get there? And how do we get there? We'll see. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down to the open of markets, and Hong Kong markets are shut. So certainly they're taking a break from this volatility that we've been seeing of this week, and certainly a lot of questions on what's going to happen, right? We're kind of sitting on our hands until we wait for any sort of announcement from this Ministry of Finance briefing that's happening on a Saturday as well. There you go. Futures are basically erased most of the gains in the last 30 minutes or so. Yields are ticking lower in the CGB market. Doesn't look like it's going to be too much risk today.
Yeah, you gotta think about the risk right now that, while policymakers certainly have the markets in mind when they come up with policy, when markets run up a bit too much, maybe, might the risk be they might need to temper expectations of the market. Maybe that's why they're having it on a weekend. Maybe they want to be able to induce a more sustainable rally, right?
Yeah.
Maybe they don't want everything to go into stock market. I'm speculating, but that's barely the surface when you look at the amount of speculation in the markets right now. As you can see, we're pulling back a little bit right now. It's looking like a normal day as far as price action goes. 0.8%. CSI 2000 is down about 0.9%. There's broadly across most sector groups, we're seeing some declines, not substantial either way as well. Some of the big stocks at bottom of your screens, CATL, SMIC, Kuwait Jamal Tai, just to give you a sense really of how these large caps are trading. And as I continue to talk, flip the page, please, we're seeing more downside coming through in these markets as we speak. So we're also looking at, I guess, what is a proxy for expectations of these markets? We have an economic consensus of 2 trillion. Market consensus is we look at things like yields, we look at things like cyclicals, for example. Rebar futures are down, steel prices effectively. Cyclicals like Antwerp conch cement, the real estate gauge, 1.5%, on top of the drop we had yesterday. So the markets rallied onshore in China yesterday, except for real estate. So that in some ways gives you a snapshot of maybe where markets don't expect the short-term fix to show up immediately. 1, 5, and 10 and 30 on your screens. We're seeing a rally on the long end. As you can see on your screens, a fourth day. There's a 30-year bond auction today, so keep that in mind. We'll get more details on that in a moment. And yeah, apart from that, I guess we really just have to wait this out.
Have some patience, right? I think that's what all the bulls are saying here right now. Is this really the start of some sort of long bull run is still the key question. Let's bring in our Winnie Xu, Asia equities reporter, joining us now from Tokyo with more. Winnie, what are we expecting today?
Exactly. Like you saw, the CSI market opened quite flat, and we're still expecting quite some volatility in the market today. Like you mentioned, we're all watching or waiting for the Saturday briefing to provide us with more hints on the policy direction. And market is right now pricing in or expecting a 2 trillion yuan fiscal support and potentially more support on the consumption demand side of things. So if in the end, that the briefing is not able to meet those expectations, we're likely to see another sell-off once the market reopens on Monday. And right now, the expectation is just so high. So it's likely for them it's harder for them to kind of surprise on the upside right now. And this, like you mentioned, the timing itself is very interesting because the government is likely to want to avoid lots of volatility in the market, and hence having this on Saturday so that traders have some time to react. But overall, the sentiment is still really high right now. We saw lots of record turnovers, and we saw the retail investors are very excited to join that rally. And that's also pushing up the volatility quite a lot, making some of the longer term investors a little bit difficult to figure out which area to participate right now.
Yeah, I mean, it's anyone's guess, right? Although I think if you look at it from the last, 8 to 10 sessions, and certainly there are certain sectors that have outperformed others. Is there anything we can glean from that outperformance based on, I guess, to figure out what people are betting on right now?
Right. So we are seeing actually the tech sector to be the leading sector in the onshore market, onshore CSI market. And that's because it's one of the key beneficiaries when it comes to the policy tailwinds, and also a lot of other factors such as the recovery in the outlook and the demand for that sector specifically, and just also the cyclical cycle. So tech and growth stocks continue to be one area that people are focusing on, and also some of the other sectors that can receive this policy benefits. That includes some of the green sustainable consumption areas. So we're hearing some of the fund managers actually taking advantage of this rally to sell off some of the sectors that are seeing a low visibility for earnings. And because all the sectors right now are gaining so much, so to sell off that area and to buy into areas that see more sustainable growth and improvement in fundamentals.
And Winnie, overall, I mean, how should we be looking at this Chinese market when we get closer to the end of the year now?
So most investors are still seeing more upside to come, with Goldman Sachs saying that there's probably another 15% of upside if we assume that policies are likely to follow through. And even if this time the briefing doesn't meet people's expectation. They're citing that there are still more catalysts and more events to come. We've also got the MPC coming up and also the Politburo meeting. So there are opportunities for a government to kind of show that they are taking this the situation seriously and they are actually moving forward with the policies. So with that in mind, when we look at the Chinese equities, the low valuation and also the major underweights that global portfolios still have for this market are some of the upsides that we'll be able to see towards end of the year. And in our very recent Asia quarterly survey, we're actually hearing investors, most of them saying that China is likely to be the #1 outperformer when it comes to Asia market towards end of the year.
All right, Winnie, thank you. Winnie Xu there, our Asia equities reporter. And it's like they're watching our show, David.
Yes.
We were asking
you just asked that question, who could follow the Ministry of Finance? And I think we have the answer.
So we got a bit more details here. So after this MOF meeting on Saturday, there's a follow-up on Monday, and this is with some of the regulators. So we're hearing when it comes to the NFRA, this is the National Financial Regulatory Administration, the MIIT, the Ministry of Industry and Information Technology, and the SAMR, the State Administration for Market Regulation. So if that wasn't enough, what we're getting on Saturday, you're getting a little bit more maybe on Monday too.
Yeah, and markets are going to be open, right? So we'll see reaction to that as well. That's the detail, the bulk of the details we have so far right now on that. So let's table that, as they say. Have a look at this other breaking news, and in case you missed it, so the Bank of Korea kicked off their easing cycle. How deep that gets, well, only time will tell, but we are getting more details coming through out of the Bank of Korea's statements. And I think the key thing here that's gone red on your terminal, red headline, is that they have removed the phrase restrictive stance from their policy statement. So that's key, and what that means we'll really get more context when the press briefing begins in the next hour or so. So keep your eye on that. Markets are bid, as you can see, 0.4%.
Yeah, and I think we'll talk a little bit more about the reasons maybe behind that cut there. Maybe some of the main barriers to that pivot have basically started to fade as well. Let's talk a little bit more about China, because we heard from Temasek's chief investment officer, and he's saying that China's stimulus needs to translate into money reaching to consumers that need it the most. Rohit Sibahimalani spoke to us at the Bloomberg Buy-Side Forum in Singapore.
I think the steps the government has announced is trying to break this logjam and create that confidence which would create a virtuous loop. So most importantly, arrest the fall in property prices. Secondly, have this consumer stimulus, transferring money to people who need it, reducing mortgage rates so people have more money to spend, and doing a bunch of things around that which at least creates the desire to spend, and they would spend if confidence comes up. And on the entrepreneur side, by creating a boost to the stock market, hopefully creating some confidence, and signaling to them that, look, we're going to be behind you, giving instructions to the local governments not to harass them on 20-year back taxes, etc. Now, the first step was being done in terms of announcing the monetary policy. The big issue is going to be the fiscal policy. What's going to be the size? And most importantly, how is it going to be implemented? Because on the real estate side, they have in the past talked about allowing local governments to raise bonds that they can use to buy property inventory and support prices. But the cost of borrowing was higher than the yield they were getting on rentals on the property they bought. And the local governments don't have the financial capacity to their balance sheets are in bad shape. So nothing happened. I mean, you had the policy, but it wasn't going to be implemented. So the way this is going to be implemented is going to be fairly critical. And I think over the next few weeks, we should get more clarity on that.
You talked about the size of the fiscal stimulus. What is big enough? The numbers out there suggesting 2 trillion yuan, 3 trillion yuan, I think, according to Citi. If it were to announce 3 trillion, would that mark a turnaround? I mean, what are you looking at? What numbers?
So to me, more important than the size is how is that going to be implemented? Is that money going to do what it's intended to do? As I said, arresting the decline in property prices, the way it's implemented will decide whether it can happen or not. If it's moving in the right channels and they find 2 trillion is not enough, they will put more. So it's a question of just, okay, it won't happen now, it'll happen a little later. But you have to see effectiveness of that policy. And I think to me, that's the most critical thing.
There you go. On your screens, to your left was the Temasek CI Rohit Sipahimalani and, of course, our colleague Linda Amin there at the recently concluded Bloomberg Buy-Side Forum in Singapore. Just ahead here in shows, we'll be joined by Goldman Sachs. We're talking cars. There we go. We'll talk about the outlook for EVs, what these latest stimulus measures have been able to achieve so far, short term as far as sales go, and what the industry looks like next year as far as earnings and margins. Plenty more ahead. This is Bloomberg.
All right, welcome back to the China Show. Some major headlines that we're tracking, particularly in the auto sector here this morning. So Republican presidential nominee Donald Trump says he wants to boost the U.S. auto industry by making interest on car loans fully tax deductible and renegotiating a trade deal with Mexico and Canada. He was speaking in key swing state Michigan, the traditional home of the U.S. car sector. Trump also says he would ban Chinese self-driving vehicles from American roads.
The autonomous vehicles, we're going to stop from operating on American roads. Remember this, I will close the loopholes under Biden and Harris that are beginning to allow Chinese vehicles to creep into American streets.
Passenger car sales in China edged up just 2% in September from a year ago. Now, industry data puts preliminary deliveries at just over 2 million units, an 8% rise from August. But new energy vehicle sales soared some 51% on year. The Passenger Car Association says the figures don't yet reflect the effects of stimulus announced late last month. BMW and Mercedes-Benz quarterly sales plunged in China as the German automakers face weak consumer demand and a rapid shift to EVs from local rivals. Sales of BMWs and Mini cars recorded their steepest drop in more than 4 years. Meanwhile, Mercedes deliveries declined 13% on weak demand for pricey models. And of course, the big thing today, Tesla will unveil its long-awaited driverless robotaxi prototype in the next hour. The CEO, Elon Musk, is expected to reveal a functioning robotaxi called a cybercab and provide details about a new business model on autonomous driving. Sources tell us that Musk will also talk about plans for driver assistance features and the company's humanoid Optimus robot.
Primed, as they say. Gotcha.
They call it We Robot, this event. So yeah.
Oh, yeah, that's the event, right?
Yeah.
That's supposed to be taking place right now.
Soon.
Almost like a movie. Warner Brothers, I think.
Yeah.
That's at Discovery Law. Anyway, so Tesla's doing that. A lot of it, by the way, is already happening in China, right? Tina Hou is from Goldman Sachs, China Autos analyst. Tina, against the backdrop of this event that Tesla is, a much-awaited event that Tesla is unveiling and hosting, you've been in several of these in mainland China. Just get us a sense of where the technology is in China relative to, say, Tesla at this point in time.
Hi, good morning, and thanks for having me back. Right, so I think there are a number of robotaxi companies in China, including, for example, Baidu's Apollo, Pony AI, as well as WeRide, among the others. And we've been, over the past year or so, we've been in several test rides in these different robotaxis. I would say the performances of these taxis vary. And then one of the best ones that we've had is a robotaxi ride for around like 45 minutes throughout in a very busy district around like 4 p.m., 5 p.m. So you could say it's rush hour. And then there is no safety personnel in the front row. So it's really like a full autonomous driving. And then that ride was very smooth throughout the entire ride. But then we've also encountered some others, which, for example, if it's under a rainy day condition, the weather condition is not very good, then there might be something with its LiDAR vision, and then there will be some interventions or emergency brakes, or sometimes it just stops on the road, and then some safety personnel needs to be called from the back end to restart the car. So I would say overall, I think development is, I think a number of companies are focused on the development, but the performance still varies from trip to trip and then from company to company.
Okay, so yeah, maybe we're not quite there. You were tracking some of these numbers over the Golden Week holiday as well. There's a lot of talk about the EV sector still looking pretty resilient in the face of this consumption downgrade. What did you find during the Golden Week holiday?
Right, so yeah, we did a channel check right after the Golden Week holiday. Overall, orders on a weekly basis or on a sequential basis actually improved over 50%. If we're talking about the Golden Week holiday versus an average weekly order in September. So for the top 10, some of the major 10 NEV brands. So obviously, I think that's a very encouraging and strong number. Some of them, the highest order increased by over 100%. So that's, I think, encouraging. And then we also saw from the September data that the NEV penetration reached 54% year over year. So that's definitely encouraging. I think the strong volume for the October holiday is contributed by mainly two things. Number one is obviously, I think, government subsidy or the trading subsidy started to take effect. So we did some store visit and test rides in the end of September. And from our conversation with the salespeople, there is about 10 to 20% incremental orders stimulated by these government trading policies. So that's what we have observed early on. And then so far, according to our tracker, there are already about 1.1 million applications for the trading policy already. So that's the first, I think, reason. Obviously, the subsidy will help. The second reason is also over the past month or so, we've seen a lot of new model launches starting from late August. So there were over 10 new NEV model launches, including some of the more high-profile ones like XPeng's Momma MO3, NIO's Envo L60, Zeekr 7X, and then the Ito R7. So I think both these factors contribute to the stronger order momentum and sales momentum going into the Golden Week holiday.
Right. Tina, just to clarify, when you say incremental, and I'm not sure if you have data on this, because incremental could mean in addition to what would have been, or are these sales simply being brought forward because of the subsidies? That's one part of my question. The other part is, since you mentioned a lot of models coming through, are you expecting the same price cuts, that intense competition that we had late last year to be a feature going into the fourth quarter of this year?
Right, I think the 10 to 20% the salespeople quoted is when we asked them how much incremental demand do you think is brought on by the stimulus or the trading policy. I think that's their answer. So I would say it's on top of the normal demand. Without the stimulus trade-in, then people probably would not have made the decision at that time. So that's one. And two, in terms of the competitive landscape or the price competition. Last year, obviously, I think going into the fourth quarter, there were more intense and elevated price competition. But this year, we're seeing sort of diverging trend between NEV and ICE. So our weekly tracker shows for the ICE brands over the past 1 to 2 weeks, their dealer discount continues to widen. And then from some of the traditional OEMs, their comments also say that they expect the continued subsidy or continued dealer discount to widen. However, for NEVs, I think there we see less demand or less urgency to do more discount, because I think there are two ways to drive volume. Number one is new model launch, and number two is the discount. So if you have a lot of new model launches, you can sort of do that to drive your order, drive your volume, instead of making discounts on your existing cars.
Yeah, Tina, what does that mean for exports then for some of these car makers? Does that start to slow, or can it continue to rise?
Right, so actually in terms of export, this year NEV export is lagging behind ICE so far. Year to date, NEV export is just around 20% year over year versus ICE is actually around 35% year over year. So we did see, I think the overall NEV adoption slowdown overseas have had some impact on the export side of things. But in my view, this is more near-term, short-term volatility due to several reasons. Number one, I think the overall supply, NEV supply in the overseas market is not as strong as in China, especially in terms of affordable mass market models. Number two is we also saw some markets such as Thailand this year. They had a NEV subsidy step down versus last year. So that has contributed to some of the slower export volume. But we think it's short-term volatility because the same type of NEV subsidy slowdown has been happening in China over the past 5 years. But eventually the price, the technology, the product itself, it should drive the penetration.
Tina Hou, thank you so much. China Autos analyst at Goldman Sachs joining us out of Shanghai here this morning. We got plenty more ahead. This is Bloomberg. All right, we're still a bit of a back foot here, but yeah, we're still dealing with some swings across these markets on the main line here this morning. CSI 300 just getting closer around that 4,000 level, but still, we're still seeing some steep declines, about 1% or more. Shenzhen also falling a little bit more this morning, Dave.
Yeah, that's ahead of a briefing tomorrow. And just in the last hour or so, we just also found out and it was announced that there's another briefing taking place on Monday. The details of that story in the next hour of the China Show.
Welcome back to the China Show. Here's a look at the CSI 300 a half hour into the session, and we're extending those declines now to about 1% or so. Hong Kong is shut for a holiday here today. So, of course, it's going to be choppy, just given what we've seen in the price action the last few days or so. Volatility really is what is the only thing that seems to be stable so far in these markets. And we're looking to see maybe this MOF briefing on Saturday, followed by another briefing on Monday. That could maybe stabilize these markets a little bit, Dave.
Yeah, the only thing that is constant and consistent is change. That's something deep for you this Friday. Going into the weekend and more on this other press briefing that's going to take place on Monday. We're looking at markets right now, so we are down for the week. It has been anything but a normal week in any case when you look at these markets. In terms of market breadth, where most stocks are down, we're led by the small caps on the way down. The valuations, depending on which index you're looking at, are largely back to your historical averages, although it's important to qualify as well when you look at ex-China, for example, that valuations currently are nowhere near, are still substantially below where they would normally be when you get a sustained bull market and multiple expansion. So there is room for expansion if, in fact, we do move into a sustainable bull market here. Let's take a listen to what some of our guests are expecting out of tomorrow's briefing.
I think we probably would get some guidance, but I think what the market is hoping for, like if we need some kind of budget expansion, we still need the approval from the NPC Standing Committee.
I think that change in policy reaction function to something that's more aggressive and coordinated, we definitely have conviction in that, as we have seen from the Politburo meeting, from the coordinated action so far. But what we still need more details on is really on the size of the policy support. I know we're all waiting for the Saturday's press conference to get a bit more detail of how much we're actually getting on the fiscal side.
The magnitude of the stimulus does matter. It's because I think the market expectation has run high. And I think whether it's 2 trillion or even above 2 trillion, definitely there's some expectation there.
Yep, and for Chinese investors, of course, it's going to be that magic number, right, that comes out on Saturday. Is that going to be enough? $283 billion, that's about 2 trillion renminbi. That seems to be the consensus here right now on what could maybe shore up some confidence in the economy and these markets. And that we have a new Bloomberg survey out that seems to suggest that is what people are betting on for this weekend as well. For more, let's bring in our China correspondent, Min Lo. Yeah, it's safe to say we're all not going to work too much, or we're going to have to work this weekend, basically.
Yeah, well, the bar is really, really high for an upside surprise tomorrow, right? You heard Winnie Wu saying, and markets are really pricing in 2 trillion yuan in this extra stimulus. Anything below that might disappoint investors, but Clock Tower Group is saying that if there's a sell-off by 5-10%, if the MOF briefing really disappointing, then they are seeing this as a prime opportunity to buy because just the backdrop, the policy backdrop and sentiment has really changed, and they see the market highs in May as a solid floor for this current market cycle. So that's also interesting. And Bloomberg Economics is seeing we may not see any stimulus at all because the current budget spending so far this year, only 55% of the budget has been spent. So 18.4 trillion yuan still not yet disbursed. So we might hear from the MOF tomorrow that they just want to accelerate the current year's budget spending. And they may also want to front load next year's quota of special sovereign bonds and local government special bonds as well. But investors are definitely looking out for what this stimulus is going to target, whether we'll hear more fiscal, more consumption-driven measures from tomorrow.
Yeah, it was interesting. I think Nomura's Ting Lu mentioned too that you might be disappointed from this MOF briefing because any sort of extra budget funding does require the approval of the Standing Committee, which doesn't meet until mid-October, maybe early November.
Right.
So maybe you might be disappointed about this meeting as well, too.
Well, I mean, they came out with 1 trillion to surprise us a few months ago.
Yeah.
And, to your point, they haven't even gotten even close to spending that amount. But the feel-good factor in markets really has to go with just briefing after briefing after briefing. I mean, we have an inflation print, which I believe comes out on Sunday, which I would largely ignore because on Monday, new news, this other briefing that's now been announced.
Yes, the market regulator, the financial regulator, and MIIT, that's the Ministry of Industry and Information Technology. So that's the agency in charge of industrial planning, industrial policy, and also advanced technology as it relates to communications technology. So this is where we might hear, again, more measures perhaps to shore up private sector growth and investment. And it's going to be more supply-side policy, right? And that's why I think the NDRC meeting was really disappointing because NDRC is in charge of the demand side. And maybe if the MOF briefing had come before the NDRC, that might have been better because NDRC, then we can hear more about the implementation of what MOF is saying. But they kind of swapped that sequence around. And then that's kind of a letdown.
Yeah, they should have ordered that a bit better, maybe.
Yeah.
A bit of a better
sequencing of events,
progress,
right?
Yeah.
Yeah, I mean, markets want to hear the what, not the how.
Yeah.
But the how is really more important when you look at valuation. Anyway, Min Min, thank you so much. Min Min Lo there, China correspondent, just getting us up to the closest point of certainty, really, ahead of tomorrow's briefing. Now, based on how markets have traded, and I think there was a Goldman Sachs report, Yvonne and I were talking about this a few days ago, that a lot of the hedge funds have sold their positions because of how far the rally has come.
Yeah.
Jeff DeGraff, though, thinks that those hedge funds are in for a world of regrets.
World of pain that could be coming. This is, of course, the Lehman Brothers and Merrill Lynch veteran. He's now one of the biggest bulls, China bulls on Wall Street. And he's talking about, what, 6,000 for the CSI 300 in the next 12 months. That's more than 50% upside. Is what I'm saying. And what he says is, look, we see the policy response as self-preservation, a reaction to the weakness, and a potential Mario Draghi-esque do-what-it-takes moment for China. So he says skepticism, valuation, stimulus, momentum, and trend change. It basically sets us up. The stars have aligned, he says, for a rally.
Similar to what David Tepper had to say,
yes.
Right? By everything China. Now, our next guest is Christy Tan. She has a similar view. If you think 50% sounds crazy, Christy Tan also thinks that could go up to 100%. 50 to 100%, Christy. Thank you for joining us. Happy Friday morning. Investment strategist at Franklin Templeton. Yeah, Christy, okay, I think lots to unpack there, but what gives you the confidence that this index could double? And by the way, let me press you, by when?
Well, timing is always a big question. It's a million-dollar question. I think there is definitely, at least in the near term, 10 to 15% upside in Chinese equities. Now, a few conditions have to be met. I think I have to qualify that, right? A few conditions have to be met. Now, first and foremost, the announcements thus far by the Chinese authorities, they are significant, undoubtedly. And more importantly, the Chinese administration is aware that more is needed to be sufficient in achieving its objectives of arresting the overall economic decline and achieving overall growth targets in coming years. So this brings us to the importance of quantum and speed. And I'm really echoing a lot of the analysts and that you've talked to. So quantum-wise, headline figures are important. And that's why all eyes are now on the Ministry of Finance briefing on Saturday, and the Bloomberg survey showing around 2 trillion yuan that is expected to be announced. Now, I would also, I think, argue that actually the Ministry of Finance will be able to make some announcements without the MPC's approval. So I think that also sets up, and it has done that in the past. I think we saw that during the pandemic in March 2020 when the MOF actually announced some special measures that that goes without the MPC's approval. And as you mentioned, right, there is so much that hasn't been spent yet. So that brings us to the quantum, the headline number is important, and as long as these measures are supportive of domestic consumption and confidence in the forms of cash vouchers and subsidies, this will help to arrest some of that concerns. Now, this brings us to speed. So speed-wise, we're seeing some evidences that authorities are ready to step up in terms of putting plans into actions. And that's what, I think if you look at the last 5 mega rallies in Chinese equities, 3 of them have been policy-driven. And so the speed in terms of communications, in terms of announcements. So even if the MOF disappoints this time, it is then really up to the NPC at the end of this month. And the continuation of that communications, that plans, actions are coordinated, are concerted, that will give us a lot of reasons to actually look at China as a very interesting value proposition.
Christy, I get your point. Others on the other side that have expressed skepticism, right? They're starting to flag valuations are one thing, that we pretty much after this explosive rally already are at normal levels. We've normalized in terms of valuation. So maybe it's not as cheap as it was maybe a few weeks ago. And then again, this whole prospect of we've been here before, we've been burned before so many times that you're still not seeing long-only funds really convincingly take part in this market. It's hard to chase these outside gains. What's the counter argument to that?
Well, of course, cheap can be cheaper. And over the last few years, that has always been the justification that, valuation is probably the only reason why anyone should be investing in China. And that has led to a lot of hesitation. And I do see that, even value investors, they've been looking to justify that low multiples in China over the last few years with something that is more optimistic and prospects of a turnaround. So now they can actually find it in the policy pivot. So I think that is the big difference here.
Christy, just to also get your thoughts on this too. I mean, so you mentioned, well, we've had 5 mega rallies before, 3 of which have been stimulus driven. Let me play the devil's advocate here. And again, I might be accused of being a China bear, which I'm not. But I mean, the current economic challenges are consumer confidence, right? And arguably, consumer confidence was not an issue in those 3 previous rallies, which responded to stimulus like it was a question of money, effectively. And now, arguably, you have the toolkit of the government. They're throwing everything at this almost, but it's something that they've not, they haven't encountered before. And so far, we've heard a lot from policymakers. What we don't have a lot of information on is how the consumer will respond. And I'm wondering what gives you the confidence that you think they will?
Well, really great question. And David, I would argue that actually they have. They have in the past experienced, instances when consumer confidence was at a low and then the policy drivers were actually deployed to stimulate that. And that is why we think that, from experience and from a historical perspective, there will be the possibility of this being effective. And you know what? During COVID and even after the reopening of China post-COVID pandemic, there have been experiments of essentially, providing cash vouchers and spending vouchers for certain cities only. And it wasn't nationwide, but it was for certain cities. And they've actually discovered that the multiples in terms of the spending, if you provide like a $1 into the pockets of consumers, they can actually give a multiple of about 3 times. So that was an experiment that was done post-pandemic, and it has shown its effectiveness. So at this point in time, I agree that consumer confidence is probably at multi-low, and it takes time, right? So over the past 3 years, that the consumer confidence have been really on a decline, and it hasn't really been showing signs of any recovery. So it will take time for that to recover as well. So we probably will see that, as one of the most important lever that the Ministry of Finance will be able to pull at this point in time.
In the meantime, though, until we get that to feed into the economy, this is a very liquidity-driven market now. It's back in some ways, Christy. How are you positioning? It looks like if the stage has been set for some sort of mega rally, what's the investment advice now?
Well, for value investors, you definitely are in the right positions because you would have been well positioned for this. And I think even if you look at the global environment, the Fed's cutting rates, and we're reaching the last stretch of the U.S. elections. So all the backdrop, even that, I mean, if you look at just where performance of emerging markets or equities in APEC after the Fed cut rates, that, and you're looking at potentially on average, around 70% of a rally in Chinese equities, 12 months from the Fed's first rate cut. So I think, as not just value investors, but anyone looking into, just China, and also because of the policy pivot that's happening, there are many ways to position this. You can really increase exposure either via Hong Kong or increasingly, via even some of the passive ETFs.
Yeah, I mean, Christy, if you're right, this could go up 100%. It really doesn't matter what vehicle you're on, right? Where does this leave other markets like the U.S., which touch a record high? Markets like India that have done well on the back of maybe because China hadn't done well. Just your thoughts on everything ex-China at this point, then.
Yes, so, well, perhaps from a portfolio management perspective, this could well lead to some of these allocations away from some of these high performers and then, back into China. But I would say that at this point in time, a lot of the global backdrop is just is just showing signs that increasingly for equities markets, there's still some room to grow and increase, and the rallies have legs, although there's going to be a lot of volatility that investors have to be mindful of. So we would always suggest getting out of cash, but going into quality, going into essentially probably growth and certain sectors that will actually look to benefit, be it consumer discretionary, financials, or energy, that could look to benefit from the more constructive global backdrop.
Seems like you're leaning more towards equities, towards risk assets, Christy. How should I look at treasuries and bonds right now? We've seen this treasury curve basically shifted around that 4% level. Do you think we're back to fair levels after this sharp sell-off?
Well, for the long term, there is still some scope for the concerns that, how is the U.S. economy slowing, the extent of the slowdown, and whether or not inflation will pick up. So there's a lot more uncertainties in the longer term tenors that we would probably want to be cautious of. And potentially, 10-year around 4.1, 4.15, that could be a great entry level. But in the meantime, I think to look at, to tide through some of the volatility that will present itself in the near term, look at short to medium term intermediary treasuries. Those are actually good, I think, positions to hedge against the volatility.
Yeah, but Christy, you just said get out of cash. I'm kidding. We know what you mean. Christy, have a great weekend ahead. Christy Tan there, investment specialist.
You too. Thank you.
Templeton Institute. All right, we're waiting to hear, of course, out of the Bank of Korea. They just cut rates announced a rate cut about an hour back. There's some changes, of course, to some of the commentary and phrasing out of the Bank of Korea. They'll effectively tell us and give us context when this live briefing begins in a couple of minutes over in Seoul. In the meantime, though, it is D-Day for Tesla and Elon Musk as the firm reveals its long-awaited driverless robotaxi prototype. That story is just ahead. This is Bloomberg.
All right, live pictures out of Seoul here this morning. You're watching the Bank of Korea Governor Lee Jae-yong speaking this morning, and really what went down in that boardroom leading to this 25 basis point cut, the first in this easing cycle for the BOK. Turns out it wasn't unanimous. So what they're saying, there was actually one member that opposed for today's rate cut and actually asked for a hold as well. But overall, they said 5 members see that rate at 3.25 in the next 3 months or so. So maybe a little bit more indication of maybe more cuts to come, Dave.
Yeah. What a killjoy. Anyway, no, I'm kidding, of course. And, you know, the reason I bring that up is because the minutes out of the Fed meeting recently have also suggested that not everyone was on board 50, right? And I think that's very key to note. We're getting to the point in the cycle where how deep do we get, how big do we deliver? Yeah. There will be dispersion of opinions right now. And, of course, it's the job of the gentleman in front of me in this case to just clarify, of course, what the message should be.
It looks like, though, they're willing to hold for at least by the end of the year.
3 months.
So, yeah, 3 months. So that senses maybe there is a bit of hesitation that maybe this is just one for now, and then we'll assess. We'll wait for what the Fed does first later. But yes, at least kicking it off. We talked about what maybe have led to this sort of pivot from the BOK. Inflation basically is back to target. Also, signs of cooling in the housing market. I think that gave us them enough of a chance to take action today.
Yeah, Seoul home prices, to your point, and household debt growth is expected to gradually slow. And, you know, Joanna Chua out of Citi called this a few days ago, right? There's this hawkish cuts.
Yes.
That they'll do something, but then they'll take it meeting to meeting. So I guess for now, we'll leave this there. And as we get more headlines coming throughout this press briefing in Seoul, we'll get them to you in a moment. For our Bloomberg clients, by the way, this is a live go. You can continue tracking this. And if you want more commentary, it's TLIVGO. Add the T to the beginning on your Bloomberg terminals. Plenty more ahead. This is Bloomberg.
Space, the next frontier of the tech sector. On Friday, Bloomberg Technology is live in LA for a special episode from Rocket Lab, featuring conversations with founders and investors of the companies plotting humankind's future outside of Earth's atmosphere.
We're going to get hands-on with the future of space technology, from rockets to robots.
Countdown to 11 a.m. Eastern, 8 a.m. on the West Coast, only on Bloomberg Television. Context changes everything.
Welcome back. Here are some of the stories that we're following at this point. BMW and Mercedes-Benz here, quarterly sales plunging in China as the both German automakers faced weak consumer demand and a rapid shift to EVs from local rivals. Now, sales of BMWs and Mini cars recorded their steepest drop in more than 4 years. Meanwhile, Mercedes deliveries declined 13% on weak demand for pricey models. Now, Stellantis is replacing its finance chiefs as part of a broad management overhaul as it tries to regain investor trust and stabilize its business. The CFO, Natalie Knight, will be replaced by Doug Osterman. Now, Knight joined the car maker last year and faced a backlash over a recent profit warning and admission that the company's full-year margin target was, quote, ambitious. Now, AMD suffered its biggest stock decline in more than a month here after the company unveiled new AI chips at this event in San Francisco. Now, investors had also been hoping for new information on customers and financial performance. Now, the stock, keep in mind, despite a 4% drop, remains still up double digits this year. AMD has emerged as the biggest contender to NVIDIA in the lucrative market for AI processors. But the CEO, AMD President and CEO Lisa Liu tried to reassure investors and says she is optimistic about demand for the industry.
This is an incredibly fast-growing market. I mean, if you think about, what we've done just over the last 12 months or so, we've seen MI300 demand increase from when we started the year to, in our most recent earnings, we actually said we would be over $4.5 billion in this important AI accelerator market.
I'm sorry, it's Lisa Su. There we go.
Lisa Liu's our colleague.
Yeah.
Shout out to her, though.
I was half an alphabet ahead of that or after.
All right, we're taking a look at some shares of 7 and I. Obviously, the earnings came out, so there was a cut to the profit outlook, so maybe that's why the market's a bit disappointed. Also, there was that sort of announcement that they're going to split into two to try to fend off this Couche-Tard takeover as well. Fast Retailing also came out with some good numbers, but the stock is up some 4%. Plenty more ahead. This is Bloomberg. $11:29 a.m. in Tokyo. Japanese markets are heading to that lunch break in just a moment. Pretty decent day in Tokyo right now when it comes to the Nikkei 225. We're up about 0.6%. Dollar yen seeing a little bit of weakness there. So we pair back up from the initial weakness of 149. We thought we were approaching 150 levels. So 148.73 this morning, Dave.
Yeah, we've been several weeks now, just a couple of thousand range here, just below the 40,000 handle here. So might take a few more weeks. We are poised, though, as things stand, for a weekly gain of about 2.5% as things stand. Right, now let's the Bank of Japan, the deputy governor, says the central bank will stay on its path of hiking interest rates and unwinding easy policy if the economy performs in line with projections. That's a big if, of course. Ryozo Himino's comments are the first here by a board member since the new Prime Minister Shigeru Ishiba warned against another rate hike. Himino told a Bloomberg event in Tokyo that the BOJ can improve the way it communicates after its July rate rise surprised traders.
There is no silver bullet in better communication. Each approach comes with pros and cons. And I would say that there is no clear consensus yet among board members about which approaches to pursue. But I can testify that there is a strong will among us to learn from what happened and continue to try to do better.
Also at the Bloomberg event, former BOJ Deputy Governor Wasazumi Wakatabe emphasized the importance of the central bank's data-dependent approach to policy. He joined a panel discussion with the former BOJ Executive Director Kazuo Momma and JP Morgan Securities Rhee Nishihara.
Now Japan is at a critical sort of juncture. So we are at the sort of the critical phase. Going from moving away from deflationary, stagnant Japan to newly emerging sort of mildly inflationary, growing Japan. So that's why you are here. Right? That's why you are trying to sort of report what's going on in Japan. So that's my general point. I think for specific points about the totality of economic data, I think you cannot argue against that totality because as a former deputy governor of the BOJ, the communication is very, very tricky. Yeah, suppose I say, that's, I'm just looking at the inflation expectations. Then, the people just take a look at market participants will focus on inflation expectations. But I think that he has given us some hints. And we are going to talk about the future course of the BOJ action. My sense is that Himino-san is confident about BOJ's predictions. Okay. It's right or wrong. So that's the big question. Yeah.
So it's really interesting, even during his comments, he even mentioned the pass-through of the level of the yen into the inflation outlook and into what the BOJ is going to do, right? So let's sort of try to gauge where at least private markets and investors think that the yen will go. Nishihara-san, you want to take us there? What is JP Morgan's view, for example?
Yes, JP Morgan expects dollar yen. Farthest is September next year is 139. So it will be like something like 138 and 25th. 25 end is the point all market focus because by then Fed's rate cuts will be mostly done. So now today, that in forward curve, the dollar yen pricing in at the end of 25 is 142. And on the date of sell-off on August 5th or mid-September, when Japan equity markets face challenge, the Nikkei was 36,000 at the time. The dollar yen in the market and 25 is 135. 134. So today, it's the market gets, much better in terms of the sentiment. We had preemptive FRB, the Bank of Japan's communication sounds like very dovish in September. Communication is tricky. So we had a good U.S. payroll, right? So dollar yen matters. And looking back at equity markets after July 31st, we are actually coming back to the same level. 40,000 Nikkei today closing level is exactly the very close level before the July meeting of the BOJ.
Which, of course, wreaked havoc to yen carry trades, and then we had the yen really soaring. But really, Momma-san, let's talk a little bit about the importance of the currency for the BOJ, because even in their statement last time, they said that it would have more of an impact than before.
Yeah, actually, Himiro-san earlier didn't tell anything about exchange rate. That is the dishonest, actually. What actually found out very interesting in the last press conference by Mr. Ueda, Governor Ueda, September meeting, actually he said U.S. economy 17 times in a 60 minutes conference. So every 4 minutes, he said U.S. economy. He is talking about Japan's monetary policy, but he still reveals to prefer actually mentioned U.S. economy. That's exactly revealing how much BOJ is concerned about the external development, which could affect exchange rate. Actually, a July rate hike was motivated by very weak yen. I think probably 80 or 90% of motivation was weak yen at that time. So since then, after the August turmoil, BOJ suddenly changed the tone. No wonder, because the yen was 140. So now the yen is approaching to 150. So I think that will put BOJ in a very delicate position going forward. So if the yen further weakens, 150, 155, and people are starting to complain about the weaker yen and higher prices, I think that will actually prod the BOJ to move forward the timing of the next rate hike.
Yeah, very blissful conversation there, I guess, on the panel there from our Navigating the New Japan event that took place, of course, in Tokyo yesterday. Right, let's talk about this event, of course, that we're looking ahead to, much awaited event out of Tesla, this robotaxi unveil looks to be, well, delayed. It's after expected to start about 30 minutes ago. Our co-anchor, Ed Ludlow, is with us out of LA to talk us through this. Ed, so we've been waiting for, I guess, the better part of 30 minutes now. What's happening?
Waiting for the event for 30 minutes. I've been waiting on Elon Musk and a robotaxi for 10 years. So the event is delayed because there was a medical emergency in the audience, and that is all according to an Elon Musk post. We have a lot of sources that are attending the event, which is just a few miles from where I'm sat, and actually in the audience they don't know anything about it because they don't have any connectivity, so they can't check X or Twitter, and they haven't seen the post and it hasn't been announced. But that's the state of play. Should start soon.
Ed, there's so much at stake here. You talk about this dream premium on the stock. I think it's rallied some 70%. Since the lows that we saw a few months ago. Yeah. What do we need to hear today to separate this from just buzz to something of actually substance?
Yeah, it's a great phrase, the dream premium, but I would also call it like a vision premium, and it's about an adjustment of what you think Tesla is. We all know Tesla is a company that builds electric vehicles and energy products and then sells them to consumers, or in energy case to other businesses. and what we expect Elon Musk to outline, not just showing us a robotaxi, a purpose-built one, but a platform, an app, something akin to Uber or Airbnb, where there is a fleet of robotaxis, some of which Tesla owns and operates, some of which consumers own and operate, hence the Airbnb bit, and you go on the app and you summon a robotaxi and it picks you up and takes you on a ride. And that is a future business model for Tesla. And for a lot of investors, they don't see the jump from where Tesla is right now with a software suite that's in a consumer car to that future business model. And maybe we'll find out more imminently.
Yeah, and what do you think that is? Why do you think there is still that difference, that that conceptual bridge that investors need to need to sort of bridge between where you are with the valuation and where Elon Musk sees this to be?
Well, because you can't just get rid of the bread and butter business. You know, Tesla is still taking into account BYD, the biggest seller of EVs in the world on any given quarter. But give credit where credit is due, Elon Musk has been consistent, at least in recent years, about talking about this. It is a hybrid model for this app. They have a purpose-built robotaxi. It doesn't exist yet, but they plan to build it. The idea has been for a really long time, there are all these Teslas around the world. Either they have been on leases or you own them, and owners should have the choice. If they're not using them, then sign them back over to Tesla. Imagine being at your house, you're not using your car, you say, okay, Tesla, off you go for the day. And off it goes of its own accord. It drives itself. It sounds, I know, you have to laugh, don't you? But that's literally what we're talking about here. And that's convincing the institutional investor and the retail investor. And the retail investor already believes it, right? That's the story in the investor base.
Ed, great to have you. Keep us updated once we hear anything from Elon Musk there. Ed Ludlow there, Bloomberg News technology reporter and co-host of Bloomberg Technology. And speaking of robotaxis, we talk about really in China, it's things that you've already seen on the road, right? We're also hearing from the EV maker there, XPeng, looking to officially roll out its version in 2026. Now, in a Weibo post, the CEO, He Xiaopeng, says the company is accelerating development of its robotaxi. And he says the vehicle's cockpit could even be designed to imitate a physical setting, such as a cafe.
Okay.
Have some coffee, you know.
Why not?
Yeah.
Right? What else can you do in a car? Coming up next, South China Sea tensions in focus at the ASEAN summit in Laos, and we'll hear from Belt and Road Capital Partners on how to really make sense and navigate all these ongoing risks in this part of the world. This is Bloomberg. This is Trending in China, and a look at what's making headlines in national newspapers and also trending on social media. Now, we're getting more details about this equity swap facility at the PBOC. Now, a front page report, well, in the PBOC-backed Financial News, says it will have a maturity of 1 year with the possibility of extension. And the report also says the scope of collaterals for the swap may expand in the future. The $70 billion dollar facility, to be more specific, seeks to provide liquidity to investors to buy stocks and began accepting applications, of course, this week. Now, days after his briefing that underwhelmed the markets, the head of China's top economic planning agency, that's the NDRC, has written an opinion. Well, I'm having trouble speaking this Friday. Opinion piece for the People's Daily. The NDRC chairman, Zheng Shanjie, says that the government will address market concerns in a timely manner and also boost economic monitoring and also forecasting.
Yep, and the ASEAN summit is also a key focus of state media. It's front page in the People's Daily, which also carries comments from Premier Li Qiang on how the China-ASEAN community has benefited people from both sides. And at the ASEAN +3 summit, Li also called for understanding when handling regional conflicts.
We understand that amity and good neighborliness are invaluable to a country. We will be able to promote understanding through dialogue and promote harmony with friendliness and kindness when we deal with differences, disputes, and conflicts between countries.
Now, those comments come with the South China Sea, of course, very much in focus here at the summit and at the meeting with Li Qiang. Philippine President Ferdinand Bongbong Marcos Jr. called on nations to reduce tensions in the waterway. He says the Philippines continues to be subjected to harassment and intimidation. Now, Chinese and Filipino ships and crews clashed several times in that part of the world earlier this year. And just last week, Vietnam accused Chinese sailors of an attack on one of its fishing vessels that injured 10 people.
Yeah, joining us from Phnom Penh is Digby Wren, geopolitical risk analyst and policy advisor at Belt and Road Capital Partners. Let's start on the South China Sea, Digby, because it seems like you're hearing that, Li Qiang saying, look, it just needs to be more understanding right now. Do you see some sort of off-ramp to these tensions that continue to escalate? Or are we actually seeing some sort of armed conflict with China that's imminent now?
Yeah, I don't think there's an imminent armed conflict. I don't think that's going to happen. There's no actual conflict at all, actually, in the Pacific at the moment. And everybody would like it to stay that way, especially in ASEAN. And of course, this is going to be the central focus for ASEAN is economic development, the partnership with China, and trying to build a consensus around Myanmar, around the South China Sea, and what's going to happen in the November elections in the US, and how that's going to work with Gaza and Ukraine as well. So it's a big agenda for ASEAN in Laos, in Vientiane today.
Yeah, Digby, I'm wondering how you are able to say that there is no conflict. I mean, these ships are ramming each other.
Yeah, I mean, we don't call that conflict in IR. Basically that's just, they're juggling, they're just trying to make some space for each other. But really what's happening, of course, is the problem in the South China Sea is that the area that they're talking about is outside Philippine actual EEZ. It's outside of Philippine area. It's not covered by the American Defense Treaty. And so that's what they're trying to push on because they see it sort of international, clear waters kind of thing. And China is just spending all their time and their efforts to maintain the status quo so that the Philippines don't change it. So look, whether that can develop at the ASEAN meeting today and tomorrow, so forth, yesterday, right. I'm not sure.
Right, but wasn't there a ruling, an international ruling that this part does fall within that area of economic responsibility, Digby?
Only if they have the claim on the islands, on the shoals. I mean, you've got to have that claim. You've got to have that recognized first, and that has not happened. It's not recognized. And in fact, the US diplomatic papers clearly state that it's not covered in the Defense Treaty because its sovereignty is not clear. And so then the Americans couldn't include it in the treaty. And that is true also of some of the islands in the East Asia Sea. So, this is an ongoing thing. This is going to be talked about. Blinken's going to try and make it appear that it's, really the biggest problem that they have. It's not. The biggest problem in ASEAN is going to be able to maintain economic growth. With the Northern Hemisphere, the US and the Europe in such trouble, Germany's in recession. The US is very close to recession, I think, and the elections coming up. So, very, very difficult situation. The Russians are winning in Ukraine. That's going to be a big shock. And so that's what they're all dealing with today. But, the big one was the Thais have announced a kind of an informal approach for Myanmar. That's going to be very helpful. And so that's the sort of political side. But I think the business, commercial side, digital, cross-border transactions, standardizations, digital currencies, I think this is all going to be very, very important too.
Russians winning in Ukraine, that certainly is your opinion, Digby, but we'll get to something else. I'm just wondering in terms of, you mentioned about the U.S. interests, given all these distractions that you talk about, the state of the economy, wars and whatnot. How much interest does the U.S. have in the South China Sea and in this part of the world? And what role do you think that they have in terms of easing these regional tensions?
Well, the United States has not been easing these tensions, that's for sure. But look, I think it can be done. And I think there's a real interest in the run-up to the elections to kind of keep it smooth. I think we'll see some sort of positive spin out of the Philippines. And obviously, Li Qiang, really focusing on the idea of good neighborliness. Very hard to say, but that's been the Chinese policy for 40 years. I mean, that hasn't changed. So this is a constant. What is changing, of course, is the approach of other countries around the world. China's been very, very constant in its approach to ASEAN, and that's been very fruitful. We know that's the largest trading partnership in the world. It's going to continue to grow. Average growth in the area is around 5%, and we're looking at -% in Europe, and in the US is really hovering, at 0 because if you count inflation. So look, they want to really hold that together. Asia is still going to be the center of growth. India's got a bigger role. I think we can see that there's going to be a real concentration on just trying to keep everything calm until the elections are over.
Yeah, well, let's hope that remains the case at least. Digby, thank you. Digby Wren there, geopolitical risk analyst and policy advisor at Belt and Road Capital Partners. Have a great weekend ahead, sir. In other world news here, China's Premier Li Qiang has urged Japan to keep bilateral relations sound and steady as tensions simmer over the murder of a Japanese schoolboy in Shenzhen. Now, Li was speaking after meeting Prime Minister Shigeru Ishiba at that ASEAN summit in Laos. Now, state media quoted the premier saying relations are at a critical stage of improvement and also development.
The WTO says global goods trade will grow less than initially forecast next year. That's due to geopolitical risks and policy uncertainty. The Geneva-based organization now sees trade growing by 3%. That's less than the 3.3% growth seen 5 months ago. The WTO says that risks to the trade outlook are now firmly on the downside. We got plenty more ahead. This is Bloomberg. It's a sad sort of week, I guess.
Big announcement, yeah.
Yes, we've lost another one in the tennis world. Well, Rafael Nadal announced his retirement yesterday, and he leaves the sport as the second highest earner of career prize money. So over $130 million. I think it's 22 Grand Slams.
Yeah.
What a legend.
Nearly 100 singles titles, I believe. Nearly 100. I could be mistaken, but it's around that general region. So I know we talk about the Fed a lot on the show.
We got to talk about Rafa, too.
Yeah, not the central bank, of course. That's, in case you did not get that joke. They have stopped hiking this year. But yes, and as you can see, of course, he's done well for himself.
Yeah.
I was having a conversation with a colleague about this. What does he do now? Is he going to get bored? Is his competitive spirit? I mean, he was known to have a very, very fierce competitive spirit.
He's a dad
you could really feel his intensity.
But no, with Federer, I mean, I love that friendship that he has between Fed and Nadal, and I think Federer also commented and saying, what a career. I always hoped this day would never come. But yes, those two probably could enjoy retirement together, I think. Yeah.
Yeah.
Anyways.
What's that other sport that I keep seeing now?
Pickleball?
Yes, there we go.
Yes, love pickleball.
Maybe they could pick up there. The king of clay. All right. Very quickly back to markets right now. So we had, a couple of things today, right? So you had the inflation report in the U.S. That's sort of the backdrop and what's causing these clouds over these markets. There's the China story. There's the ongoing Bank of Korea briefing, which I believe should be wrapping up, if not already. And certainly the change in tone there, it's a cut, it's a hawkish cut. And it seems to be that the Bank of Korea is very much on board with that description as well. It wasn't a unanimous decision. There was one member that decided it was not time to cut interest rates. And of course, there's a big one, of course, tomorrow taking place in China.
Oh, yeah. It's all eyes on that, really, until we get any sort of clear sort of conviction in these markets here right now. But there you go. This Tesla event should be starting soon. There you go. Elon Musk. We'll get you more details coming up. This is Bloomberg.